Imagine being in a boat on a quiet lake as the sun comes up. Below the water, you spot massive fish, the kind that are large enough to sustain your household for weeks. What is the absolute worst action you could take right now? Diving into the water and splashing after them like a frantic lunatic? It sounds absurd when described that way, doesn't it? However, this is precisely how the majority of traders behave daily when they launch their trading platforms. They flounder around in the marketplace filled with anxiety and desperation, craving a profit. Much like the fish, the market detects this panic and retreats. In this video, I'm going to show you how fishing and stock trading are almost identical disciplines, and why the mindset required to land a trophy catch is the exact same mindset required to pull consistent profits from the market. We're going to look at why chasing is the fastest way to lose, and how true professionals in both sports spend 90% of their time simply waiting. Every seasoned fisherman understands a fundamental reality in their gut. You possess zero control over the fish. You cannot compel them to take the bait. You cannot mandate that they swim toward your line. You cannot bargain with them, persuade them, or coerce them into striking. The fish operate on their own terms. They navigate based on water currents, temperatures, seasons, their appetite, and their survival instincts. They live in a separate universe, obeying their own rules, entirely unconcerned with your financial obligations, your aspirations, or your life goals. The only variable you manage is your readiness. You decide which equipment to carry, which lure to select, the location where you cast, the hour you arrive, whether you have analyzed the water, if you comprehend the prey you are hunting, if your hooks are honed, and if your line can handle the weight. That is all. That is the comprehensive inventory of things within your power. Now let's apply this perspective to the financial markets. You do not command the market. You have no say in whether prices rise or fall. You cannot dictate volatility. You do not decide when breaking news hits. You cannot steer institutional capital flows. You cannot influence the sentiment of retail investors. You have no authority over global politics, central bank rates, or corporate earnings releases. The market functions as it pleases, and it remains utterly indifferent to your monthly mortgage bills. However, here is what remains in your hands: your trading plan, your risk protocols, the size of your positions, your rules for entering, your rules for exiting, the timing of your trades, the assets you choose, the amount of capital at risk per transaction, your psychological condition when executing a trade, whether you have historically tested your method, and your depth of understanding regarding the instrument you are trading. The vast majority of traders exhaust 90% of their cognitive resources attempting to forecast or manipulate the market, which is comparable to standing on a shoreline attempting to use mind control to force fish to bite. True professionals dedicate 90% of their effort to preparation, and subsequently they merely take action when the variables fall into place. Reflect on the most recent transaction you executed. Be entirely truthful with yourself for a moment. Was your mind occupied with your preparation, or were you fantasizing about the potential income? Was your attention fixed on whether your statistical advantage was present, or were you mentally spending the profits you hoped to earn? This is the distinction between veteran anglers and novices. The experts understand where the catch is likely to be located. They aren't aimlessly throwing lines into random sections of water hoping for the best. They comprehend the habits of the fish. They realize that specific species congregate at particular depths. They understand that water warmth is a factor. They know that the time of day alters the entire dynamic. They identify the underwater terrain where fish naturally gather. They are not speculating. They are situating themselves in the optimal areas based on wisdom gathered over decades. An amateur looks at a body of water and perceives it as a uniform surface. A master looks at that same water and interprets it like a topographic chart. They identify the steep declines, the vegetation patches, the thermal layers, and the flow of the currents. They determine precisely where to station themselves long before they ever wet a line. Let's discuss the implications of this for trading. Top-tier traders recognize where liquidity is likely to reside. They aren't simply observing price fluctuate up and down arbitrarily. They grasp the structure of the market. They identify the regions where orders accumulate. They spot the recurring formations because human psychology is repetitive. What are they seeking? Pools of liquidity, locations where stop-loss orders build up, zones where breakout traders will commit capital, levels where institutions have placed pending limit orders, the areas where price will inevitably be drawn because that is where the volume is waiting. Observe a virtuoso fisherman and you will witness something remarkable. They hardly move. They aren't frantic. They aren't energetic. They cast their line. They wait. They are attentive yet at ease. They have performed this act thousands of times. There are no theatrics, no rush, and no showmanship. Only the serene, steady implementation of a proven method. They understand a fact that novices miss. The catch will arrive when the environment is suitable. Hurrying won't accelerate the process. Stress won't increase the probability. The sole factor that counts is being present and ready when the opportunity presents itself. This is the result of pattern recognition cultivated over many years. They recognize the sensation of a bite. They distinguish the subtle difference between a tentative touch and a solid strike. They understand the exact moment to pull back and when to let the fish run. None of these actions can be hastened or coerced. They are acquired exclusively through persistent repetition. Let's examine how this manifests in the trading world. The most successful traders I know are often incredibly dull to observe. They aren't executing 50 transactions daily. They aren't staring at their monitors with clenched fists. They aren't cheering or weeping with every price fluctuation. They utilize a checklist. The market conditions either satisfy the criteria or they do not. If they do, the trader acts. If they do not, the trader waits. There is zero emotion involved in this routine because it has been practiced so frequently that it is automatic. They have attained a state that most market participants never achieve: emotional detachment. This isn't because they are indifferent, but because they have separated their self-esteem and their mood from the result of any single event. Consider that deeply. They truly do not mind if a particular trade results in a profit or a loss. Their concern is executing their system accurately because they trust that over a large sample size of trades, the system generates revenue. This is the cumulative power of consistency. One flawless execution signifies almost nothing. 100 flawless executions signify everything. However, this is the pitfall that ensnares most individuals. They demand immediate gratification. They desire a massive windfall today. They feel a need to demonstrate to themselves, or even worse, to peers, that they are capable. Consequently, they discard consistency as soon as it becomes monotonous. They discard patience the instant it feels sluggish. They discard their strategy the minute they encounter a losing streak. And that is the moment they lose the battle, because the market does not compensate for haste. It does not compensate for theatrics. It does not compensate for desperation. The market compensates those who appear reliably, follow their methodology, and possess the fortitude to allow probabilities to unfold over time. In the same way that fishing compensates the individual who returns to the water every weekend for years, studying the cycles, honing their skills, and fostering a deep connection with that specific environment. Reflect on your most admired expert in any discipline: a sportsman, a virtuoso musician, a culinary master. It makes no difference. In what manner do they train? Do they practice frantically, anxiously attempting to validate their worth during every single session? Or do they practice quietly and steadily, polishing their skills one repetition at a time? You already possess the answer. Therefore, why would the profession of trading be any different? Let us continue, because this subsequent point is where the comprehension of most people fails entirely. Here is a reality that will liberate you if you accept it. Not every fish that strikes the bait is captured. Occasionally, the hook fails to embed. Occasionally, the line snaps. Occasionally, the prey is too powerful and escapes. Occasionally, you commit an error during the struggle and they slide away right at the surface before you can net them. Seasoned anglers understand this fact. They do not descend into a personal crisis when a fish escapes. They do not doubt their fundamental identity as a fisherman. They do not hurl their equipment into the water and claim the sport is fraudulent. They simply shrug. They review the event to see if there is a lesson to be learned, and they cast their line out once more because they know there is always another catch. The water is teeming with them. Losing a single one signifies absolutely nothing in the grand scheme. This may well be the most difficult concept for traders to truly absorb. Not every high-quality setup yields a win. Not every flawless entry point results in a gain. Sometimes you execute every step correctly and you still incur a financial loss. The market is under no obligation to pay you for adhering to your guidelines. It does not give you a prize for patience. It does not promise that correct implementation equals revenue on any specific transaction. And this is the point where most people crumble because they cannot tolerate the fact that randomness is real, even within a disciplined system. They require the belief that if they perform every action perfectly, they will succeed. When they fail, they deduce that something is defective within themselves or their method. However, the actual truth is this: trading is a game of statistics. If your advantage provides a 60% success rate, it implies that 40% of your positions will fail by definition. Even when your execution is flawless, those 40% are not failures. They are not errors. They are not signs that your strategy is ruined. They are quite literally the overhead costs of operating the business. They are the fish that slipped the hook. And they signify nothing other than the fact that you are actively participating. These losing trades are components of the framework. They are not glitches. They are functions. They are not issues to be eradicated. They are merely the manifestation of probability playing out. Once you genuinely embrace this, trading becomes vastly simpler. You cease taking losses as personal insults. You stop doubting your entire existence after a series of losses. You stop trading out of anger. You stop attempting to recover immediately what you lost. You just execute, record your data, and have faith that over the long haul, provided your edge is valid and your risk control is solid, the mathematics will align. There is always a subsequent trade, another setup, another chance. Losing this specific one matters not at all. Furthermore, there are days when an angler waits by the shore for 8 hours and returns home empty-handed. The environment wasn't suitable. The wildlife wasn't active, the water temperature was incorrect, the atmospheric pressure wasn't helpful. Perhaps there was excessive noise on the water. Maybe the season was wrong. The reason is irrelevant. The outcome remains identical: zero catch. Is that individual a failure? Did they squander their time? Should they abandon the sport and start playing golf? Certainly not. They understood when they arrived that certain days yield nothing. That is explicitly part of the agreement. You cannot dictate the terms of nature. You can only arrive ready and observe the results. Traders completely unravel on days with zero opportunities. They sit before their monitors and manufacture trades because they believe they are obligated to be active. They accept substandard setups and low-quality entries because they refuse to acknowledge that today simply isn't a high-quality day. They persuade themselves that surely there must be a profitable move if they simply search intensely enough. This is comparable to a fisherman diving into the water to catch fish with his bare hands because waiting quietly proved ineffective. On certain days, the optimal trade is to take no trade at all. On certain days, inactivity is the most lucrative choice available. On certain days, preserving your funds and waiting for superior circumstances is the sole accurate action. Yet, our psychology resists this logic. We feel unproductive if we aren't physically clicking buttons. We feel as though we are losing out if prices are fluctuating and we aren't participating. We feel as if we aren't legitimate traders if a day passes without a transaction. All of this stems from ego. All of it is self-destruction. Expert traders are perfectly at ease doing absolutely nothing when there is nothing to be done. They are not compensated per transaction. They are compensated for making accurate choices, and occasionally the accurate choice is to step away, safeguard your account, and return when the environment improves. I record my no-action days in my trading log, days when I desired to participate but my criteria were not met, and I successfully refrained. Do you know what I discovered? My days of inactivity are just as critical to my yearly profits as my winning days because every trade I didn't force is money I didn't lose. The discipline to do nothing is worth more than the ability to do something because the market constantly presents methods for you to lose money. Every single day, there are 1,000 chances to commit errors. Steering clear of them is a talent. Here is the brutal reality. If you cannot endure an entire trading session without executing a transaction and feel entirely satisfied with that, you are not prepared to trade profitably with consistency, because that emotional necessity to be involved will eventually destroy your capital. Let me pose a question. When was the last occasion you shut down your software because there was no opportunity and you felt proud of that choice? If your response is never or I don't recall, you have identified your issue. The market is indifferent to your boredom, and being bored is not a legitimate justification for placing money in harm's way. Okay, we are approaching the section that distinguishes novices from experts. Listen carefully to this. Specialization is crucial. Enter any dedicated fishing group and inquire about what they hunt, and you will receive precise responses. I am a bass angler. I focus on fly fishing for trout. I pursue marlin. I concentrate on walleye. They are not attempting to capture every creature in the sea. They aren't alternating between freshwater and saltwater based on a whim. They have selected their specific lane and mastered it. They understand the behavioral habits, the seasonal migrations, the favorite food sources, the optimal times, and the perfect weather. They have specialized, and because they have narrowed their focus, they're actually landing catches with regularity. While the jack of all trades is diluted across a dozen varieties, the specialist becomes an authority on one. This appears self-evident in fishing, yet traders repeatedly overlook this principle. They trade equities on Monday, cryptocurrencies on Tuesday, currencies on Wednesday, futures on Thursday, and derivatives on Friday. They oscillate between day trading, swing trading, and long-term investing based on whatever appeared stimulating that week. They are attempting to hook every fish in every ocean using every method all at once, and they are confused as to why nothing is succeeding. You cannot excel at everything. The volume of information needed to genuinely comprehend a single market, a single time frame, and a single methodology is massive. The formations you must identify, the subtleties you must absorb, the history you must accumulate. It requires years of concentrated repetition. When you dilute your focus across numerous strategies, you ensure that you will remain average at all of them. You will never accumulate the reps required to cultivate true mastery. You will never construct the pattern recognition that divides the pros from the beginners. Select one area, one asset class, one specific tactic, one chart time frame. Whatever resonates with you, whatever accommodates your lifestyle, whatever matches your temperament. It does not matter what it is. Simply select one and dive deep. Become the individual who understands that singular subject better than 99% of the population. Research it compulsively. Trade it with discipline. Analyze every transaction. Monitor every formation. Forge a connection with it that endures for years. This is the method for building a legitimate advantage, not by knowing a fraction about everything, but by knowing everything about one fraction. I trade one particular configuration in one specific asset class during one specific time block. That is all. I recognize when the odds are high and when they are slim. I understand how it reacts in various volatility climates. I recognize the minute distinctions between the variations that succeed and the variations that fail. That profound level of understanding is my advantage, and I can only cultivate it through narrowing my focus. You imagine you are maintaining flexibility by attempting everything. What you are actually accomplishing is ensuring you will never be exceptional at anything. Be truthful. How many distinct strategies have you tested over the last few months? If the response is more than one, you haven't granted anything sufficient time to actually function or validate itself. You aren't adapting. You are simply unfocused. Bruce Lee stated it best. I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. Experts are created through the repetition of a single discipline, not through the tasting of many. Keep that in mind. Thanks for watching. Please like and subscribe to the channel. For more information on investing, check out one of the videos above.